Hello everyone, it's Wednesday, March 19, and today we'll take a closer look at the euro and the British pound charts to evaluate potential market movements. Yesterday, the euro maintained its upside momentum, bolstered by positive economic sentiment and current conditions in Germany and the broader euro area. Market attention then shifted to US housing market data, which proved to be quite positive, prompting a modest pullback in the euro. However, the euro quickly regained ground. Now its ability to extend gains will depend on today's economic releases and the US Federal Reserve's upcoming monetary policy decision. Today's macroeconomic calendar features Eurozone consumer price data for February. Inflation is expected to remain stable at 2.4% compared to 2.5% in January. Slower inflationary pressures would likely increase expectations for further interest rate cuts by the European Central Bank. Core inflation is forecast to hold steady at 2.6% in February, following a 2.7% increase in January. Later in the day, attention will turn to the Federal Reserve's policy meeting. The Fed is widely anticipated to keep its key interest rate unchanged at 4.5%. The last rate cut took place in December 2024, with the U.S. economy facing challenging, stock markets in decline, and recent macroeconomic reports underperforming. There is growing confidence that the Fed will refrain from cutting rates at this meeting. However, it may still signal potential monetary easing in the near future, which could pressure the dollar and provide support for further gains in the euro and the British pound. Furthermore, the Fed's economic projections and comments from Chairman Jerome Powell will be closely watched. If Powell expressed concerns about inflation in the context of the U.S. President Donald Trump's policies and trade tariffs, the dollar may strengthen. However, if Powell adopts a more dovish stance, focusing on economic growth and stock market dynamics, the dollar could extend weakness. Let's now turn to technical analysis. According to the 1-hour EUR USD chart, the upside momentum that began on February 28 remains intact, but the pace of movement has slowed. As such, it is advisable to avoid entering long positions at current highs. A decline followed by a false breakout at 0906 will trigger a buy signal, potentially pushing the euro up to 1.0954. If the price breaks through and consolidates above this level, the next targets would be 1.0997 and possibly 1.1047. At the level of 1047, I would recommend going short on the rebound, aiming for a 35-40 pip move. Short positions at 1.0997 and 0954 should be considered after a false breakout. If the euro dips following the Fed's meeting, a stronger bearish correction may unfold. If the price breaks below 0906, the euro could drop to 0866, potentially reaching 0827. At this mark, it would be prudent to go long on a rebound targeting a 25-40 pip move. Long positions at 0866 and 0906 are worth considering in the event of a false breakout. The situation with the GBP USD pair is similar. The British pound continues to reach new highs, signaling a strong bullish trend. A false breakout at 1.2978 amid a relatively light macroeconomic calendar would trigger a buy signal, with sterling likely rising to 30.06. If the price breaks through and consolidates above this level, the pound could extend its gains to 1.3035, potentially approaching a 1.3068 following the Fed's meeting. At this level, it would be wise to go short on the rebound, targeting an intraday correction of 30-35 pips. Short positions at 1.3035 and 30.06 should only be considered in the event of a false breakout. In the bearish scenario, if the price breaks below 29.78, the path to 29.51, 29.12 and even 28.76 would be open. At the 1.2876 level, I would recommend going long on a rebound, targeting a 30-35 pip move. Going long at 1.2978, 29.51 and 29.12 would be relevant in the case of a false breakout. Good luck to all.